Okay, for those of you who missed class, this is what we covered in class on the test. The thing that we can still do revisions, but only on the journal entries, so 22, 23, and 24. One thing I noticed with the 22 is entries have to be balanced. So if I have 5,000 in a debit, I've got to have 5,000 in a credit. So this one, the very first one, you've got consulting fees and they sent a bill. So this would be consulting fees. So they sent a bill for 5,000, accounts receivable, and then this would have to be 5,000. So everything has to match. When you get all done with this, debits have to equal credits. If you go down through here, you'll see supplies, and you purchase them on credit, so that would be accounts payable. And then the amount, whatever that is, you paid that. So if you paid it, you use cash, right? That would be your other entry. Can you hear my puppy barking? And on the 20th, you paid employee salaries. So cash is the credit, which is already there. And what is that? That's a wage expense, right? So that would be your first entry. That's your debit. And then on March 31st, you receive cash of $12,000, which is a debit. And it's an unearned revenue of. So that kind of gets you going on that one. This right here, okay, you need to adjust this amount. So you have insurance expense, and you're going to decrease the prepaid expense. Sure you are. So you have $2,400. You're using 1 month of it, so you divide 2,400 by 12 to come up with the amount of the adjustment. And I'll let you figure that out. Supplies expense that you've used, you have 600 in-house now. You had 3,500. How many did you use? Well, 3,500 minus 600 says you've used how many? That becomes your entry. Unearned revenue, you had 12,000 to begin with. You have 3,000 left. So how much unearned revenue became revenue? And salaries expense, I think this is 3 days times $200. Whoops, that didn't come out right, did it? So 3 times 200, that's how much your expense is. And if it would be a salaries payable. And then the last one is accounts receivable and revenues. So, and that's for the full amount that you hadn't recorded yet. Very last one, and this is very quick. If you have a $13,800 credit in the income summary and a $5,210 credit in the income summary, that means when you close that account, it's going to be $13,800 minus $5,210, and that actually will equal net income. So go into the book and look at the examples on this. Okay? Now, this needs to be revised and turned in by Sunday evening. Okay? I hope this helps.